Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Palantir Technologies PLTR stock, Sofi Technologies SOFI stock, Nio's Nio Stock, and Tesla's TSLA stock. So we're going to begin talking about Palantir Technologies PLTR stock, and how some stock traders are absolutely ecstatic after Palantir teases their involvement in the war between Ukraine and Russia. Then we're going to move on and talk about if Sofi Technologies' reverse stock split is actually bad or not, and then from there we're going to move on to talking about Nio Stock and how the NIO stock price could surge by around 50%, which would be phenomenal for shareholders. Then after that we're going to talk about new Nio collaborations with other companies such as AMD, and then lastly we're going to talk about Tesla's TSLA stock. So for more videos like this one, remember to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and without further ado, let's jump right into today's stories. I also want to mention that Webull has a fantastic deal going on right now, and if you didn't know, Webull is a brokerage platform similar to Robinhood where you can buy and sell stocks as well as cryptocurrencies. And if you sign up with the link below and you invest $100 into any stock of your choosing, I personally would invest $100 into ticker symbol VOO because this is a very safe investment that tracks the S&P 500, and once you do that, you are going to be receiving 6 free stocks, 100% free, and you could always liquidate your investments afterwards and just take the free money. I also want to mention that after you invest the $100 and you receive your 6 free stocks, you're going to be automatically entered in to win $12,000. So if that interests you and you want free money, remember to go and click and sign up through the link down below, which is listed and linked in the description. But without further ado, let's talk about Palantir Technologies. So Palantir, if you didn't know, is a big data and analytics company that serves both commercial clients as well as government enterprises, and right now the PLTR stock is currently trading for around $9 per share. However, analysts adamantly disagree with each other on this particular stock because negative bearish analysts actually have a 12-month price prediction that goes as low as $6 per share, while on the high-end bullish price prediction for the next 12 months, we have analysts saying that this company is worth $25. However, collectively, the majority of analysts actually say just to hold this stock for now. So let's go over the latest news updates and how this is impacting Palantir Technologies, mainly for the positive. So Palantir is one of the most popular stocks that is traded by retail investors. And with Palantir teasing their involvement with the Russia-Ukraine war, this has actually started to increase the stock price since last time we talked about this company. I also want to mention on June 2nd, the CEO of Palantir Technologies, whose name is Alex Karp, became the first chief executive to meet with the Ukrainian president since Russia invaded the country a few months ago. Palantir actually told Bloomberg in a recent statement that, and I quote, "Dr. Karp and President Zelensky discussed how Palantir can continue to use its technology to support Ukraine. With geopolitical tensions rising all over the world, enhancing security and protecting democratic institutions has never been more important," end quote. So clearly Palantir Technologies is involved in this war and they are helping out Ukraine, which is absolutely phenomenal, and this has caused many YouTubers as well as myself to point out that this is fantastic public relations and PR for Palantir Technologies. We even have multiple commenters that this Vice article correctly points out on YouTube of investors' excitement, and they even highlight a particular commenter who is extremely excited, and he says, and I quote, "Palantir to the moon." And we probably all know who this particular commenter is, because if you have looked at my channel recently or any other channel that actually covers Palantir, you can see that Doom Shallot has actually been continuously commenting this for probably over a year now. Also, a side note, if you see any comments like this that has my logo, but it's even remotely associated for WhatsApp, or you think that I'm asking you for any type of information, please report this. This is not me. So if you see any comments like this, make sure to report these so they can be dealt with, because the bot problem on YouTube is absolutely horrendous. However, back to Doom Shallot. He has consistently commented Palantir to the moon on multiple channels for many months. So I just wanted to point that out and to say that we in the Palantir community are very grateful for his comments. I want to give a quick warning to Palantir investors, and the main warning is about not overexposing yourself to a particular company. For instance, Palantir Technologies DPO'd at around $10 per share, and the stock price shot up to around $50 per share. So, if your average stock price is anywhere above $20, you are substantially in the red right now, and this has caused investors and traders to lose tens of thousands of dollars in some instances, people losing their entire savings, and it also runs the threat of ruining someone's entire financial life, which is why I always advocate to 1. Do your own research, 2. Not overexpose yourself to a single growth company, and my rule is I don't allocate more than a 5% portfolio allocation to a particular company on an initial investment, and Palantir is no different for this particular rule, even if I think the future of this company is very positive, such as in Palantir Technologies case. So remember to be smart with your money. Don't go all in on one particular company or stock, because that is not investing, that would be gambling. Always make sure you are well diversified, you're invested into every single sector that you can be, you have a good base of blue chip stocks as well as ETFs like VOO or even VTI would be a good one. So your single stock investments will not nearly be as risky, and you're not going to run the risk of having substantial losses like many people do have, because they either spent too much money on the PLTR stock back when it was at peak hype, or they just overexposed themselves to the company by averaging down. So remember that analysts overall say to hold this company for the long term, meaning 5 to 10 years. But now let's talk about Sofi Technologies, SOFI stock. So Sofi Technologies is a fintech company which offers an all-in-one inclusive app that allows their customers to access financial services and financial products. So they are basically digitalizing banking, which is absolutely phenomenal. Currently, the SOFI stock trades for around $6.90, which in my opinion is a phenomenal deal. Anything below $7, which is the low-end analyst price target for the next 12 months, to me is a good buying opportunity, while the high-end bullish price targets goes as high as $22 per share, and analysts are in agreement for this company because they say this is a clear buying opportunity right now. So we're going to talk about their reverse stock split, and many investors really don't understand what a reverse stock split is. So basically, let's pretend you have 10 shares, and the company does a reverse stock split for a 1-to-5. This means your 10 shares are going to shrink to 2 shares each. I want to make it clear that the equity in your position stays the exact same. For instance, let's say your 10 shares were worth $100. So when the reverse stock split happens, now you have 2 shares that are still worth a total of $100. So although each share is now worth more because you have taken away a set of shares, your overall equity or investment is still the exact same. Now the problem is that normally when a company does a reverse stock split, it indicates weakness either in the company or the stock price, which we are seeing for Sofi Technologies. However, overall, I do think this is going to be temporarily bad in the short term, but in the long term, this is not really going to have much of an effect. Also, when the reverse stock split happens, this is naturally going to increase the amount each share individually is going to be worth. So in the long run, I don't think this is actually going to be a bad opportunity for Sofi Technologies, even though in the short term, the Sofi stock could continuously trend downward. But with that being said, I'm still bullish on Sofi Technologies. Analysts are bullish on Sofi Technologies, and overall, I think that if you are willing to hold until the company at least becomes profitable at the end of 2024 or in 2025, I think it could pay off very greatly for you. So with that being said, let's move on to Nio's Nio stock. And Nio is an electric vehicle company, and many analysts actually think that the Nio stock price could surge by around 50% higher if their current trajectory continues. So what do they mean by this? Well, recently the Nio stock has surged by around 5%, while the overall S&P 500, which is a great stock market benchmark, has only increased by around 1%. So why is that? Well, the first reason why investors are very excited about Nio stock is that they have rolled out its 5th model, being the ES7. So they have launched this new vehicle model, even though it was supposed to be launched back in April, but they had to wait to receive clearance from the Chinese government, which they 100% have gotten now. So overall, that has been a very positive development as of late. And adding this 5th vehicle model to their overall lineup is going to not only increase their overall manufacturing numbers, numbers, but also their delivery numbers, because it's going to give customers better access to more models to pick from. I also want to say that the Nio stock is substantially trading at a discount recently because technology and growth stocks have been hit very hard. For instance, the Nio stock has plunged by around 82% from their all-time high of around $66, and now it's trading at around $11.67. So clearly you are getting a phenomenal discount right now, which is absolutely paramount to building long-term wealth. But the news even gets better. I also want to say that the low-end price target for the Nio stock is around $17, and the high-end price target is around $86 per share, which means that right now the Nio stock technically is a very good buying opportunity according to analysts. More good news is that Nio has teamed up with AMD for their chips regarding their electric vehicles. So although Tesla clearly is the global leader in electric vehicles, Nio, which is the Chinese version of Tesla basically, has been extremely successful within its home market and abroad. The company has teamed up with chipmaker AMD to use their Zen 3 based EPYC 7003 HPC platform to lower its overall total cost of ownership and slash vehicle development times in an increasingly competitive market. So in English, it's lowering the overall price of these vehicles. These chips are better than what they're currently using, and it's going to allow them to develop more vehicles in a shorter amount of time. So this partnership is extremely beneficial for both AMD as well as Nio. Now I do want to point out that Nio, although they are using AMD on their development side, they are still using Qualcomm's Snapdragon digital platform to power their display and infotainment system within Nio's electric vehicles. On the other hand, we have Tesla using AMD for their Ryzen APUs to handle navigation and their infotainment duties. So maybe in the future, potentially Nio has an opportunity to further collaborate with AMD and use the Ryzen chips instead of using the Qualcomm chips. And then finally, I want to add that Nio has a very impressive battery pack for their ET7 sedan, which is going to allow the ET7 to drive a maximum range of around 620 miles per charge, according to NEDC rating. So overall, these are very positive developments for Nio stock. And then lastly, we're going to talk about Tesla's TSLA stock and why Tesla, as well as other electric vehicles, are actually surging in price recently. So Tesla currently trades for around $715 per share, while the low-end price target among analysts is somewhat of a joke of $67 per share, and the high-end analyst bullish price target for the next 12 months is $1,620. And analysts are pretty split on the TSLA stock, some saying to buy the company and others saying to just hold the stock for the long term. Now, the reason why we want to talk about Tesla specifically, even though companies like Nio, XPeng, and Li Auto have all surged in price, while Tesla has surged substantially less by only around 1%, and this is because, according to some articles, Elon Musk is actually feeling super bearish about the overall economy, and he plans to lay off around 10% of their overall 100,000 employee workforce. But how accurate are these actual reportings? Well, Deutsche Bank actually warned that Tesla's comments have warranted giant warnings for potential investors and even a decrease in demand for electric vehicles that will affect all makes and models and companies within the United States and potentially across the world. However, with that being said, Tesla's CEO, who is Elon Musk, actually clarified on Twitter that Tesla expects that its salaried workforce will remain little changed. So clearly they're not planning to lay off around 10%. And you can see the tweet on screen, where one Twitter user actually says over the next 12 months, Tesla's headcount will increase, at Elon Musk. Then Elon Musk, who is the CEO of Tesla, replied that total headcount will increase, but salaried employees should be fairly flat. So this is actually somewhat opposite of what we were originally told about Elon Musk cutting and laying off around 10% of his overall workforce. However, with that being said, Tesla's Chinese peers, such as Li Auto, Nio, and XPeng, are still doing pretty well, with Nio increasing their overall delivery numbers by around 38%, and Li Auto actually increased their deliveries by more than double double over the last month. So clearly, this has actually been very positive for electric vehicle investors overall. But I would love to hear your thoughts down below. Remember to go and smash that like button for more videos like this one. Subscribe if you are new. So with that being said, I will see you in the next YT video.